Yeah, so I guess if we look at the chart of Zip, first and foremost, probably gives you an idea of where this report is headed. It does look like a bit of a slippery slide into a negative direction. Now, they actually reported a record revenue, up 57.4% to 620 million. Seems quite positive on the face of it. Their transaction volumes increased to 8.7 billion, and they also increased their customers and merchants that they were using through America, Asia Pacific, and Europe as well, which helped drive revenue growth. However, they did increase their costs by 75.8%, and their expenditure as a business was up 44%, so they lost for the year 1.1 billion Australian dollars. So not the most positive report for Zip. I think a lot of people probably saw this coming with the way they've sort of been trading recently and a lot of the issues surrounding regulation that buy now, pay later have run into. But I guess moving forward as a bit of a growth plan for them with their revenues and especially their profits, they're looking to, I guess, close their operations in Singapore and the UK to sort of cut back their costs and spending there, really. So Zip shares were down about 10% this week. 5.5% of that came today. But again, not the most. They've had a bit of a positive turnaround in the last sort of 5 weeks, but today and this week, not too positive, down 10% for the week.
Very good. And Dr. Adam Shedakowski, one of our coal players, Whitehaven Coal, which I know we have mentioned on the show on a couple of occasions, has done very, very well. It also reported this week. Care to enlighten us on that one?
Yeah, I will say not only very, very well, I mean, that was just really impressive numbers. And so let's actually bring a chart just straight away. So just to emphasize how good it is, I included the numbers where we see all the way from the financial year 2018 all the way to 2022. And the 2022, that's the light blue at the very bottom, at the very top of each of the subcharts. So you can just, when you compare, like, I think it's just really impressive. Like looking at a revenue, like it's just like, it's actually more than 3 times the previous reading, and that's just 1 year change. So very, very impressive. And so all of the readings throughout are all-time highs, except for maybe the last one, the capital return to shareholders has been slightly lower, slightly higher at one point in history, but very, very, very impressive results. And I will not go into all of the details here, but I mean, if you have to guess where all this money come from, right?
Just looking at those bars, like look at EBITDA and cash generated from operations. The change is insane.
It's insane.
It's like 15 times more. It's ridiculous.
Yeah, it's ridiculous.
I'm assuming maybe elevated prices.
Elevated price of coal. And of course, so this is the next chart I want to show you where that really comes from. And you can really see like the change in the price of coal from the previous years to this year is just like phenomenal, right? Last year, to financial year 2021, the average price of coal they were able to get was 95. Now it's 325. Wow. So, I mean, this is really the big explanation of that. But, I mean, there are also other things that are really driving in positive direction. There's a good management. They're driving a business in a positive direction. So, a lot of good things happening for the company. And, of course, the financial report was showing that.
Very, very good. And listen, another thing that's sort of been, I suppose, starting to take off in terms of its movement, it's certainly been flying high recently, is, of course, Qantas.
Yes.
That had a report as well.
Honestly, the worst report of the day, because I reckon I heard the TV reporters mentioned about 7 times, and every time was just, the pun was just worse and worse.
And the thing is, it was a different reporter mentioning it different times a day, thinking that was special, using the flying high pun. Now it's Will's turn. Hopefully our listeners weren't watching CNBC.
Well, it certainly seems to be spreading its wings and really moving.
That is a good addition there, but nonetheless, Qantas jumped 7% off the back of its report and another 6% today.
And this was on a $1.9 billion loss, or
a significant loss. I don't have the exact loss, but the net loss that I have here improved from 860 million, and that's due to the mascot land sale that they have, and of course increased flying over the last 12 months. We've seen a really strong bounce back. I mean, over the last 6 months, the issues have been in staff and baggage handling and that side of things. So too much demand. So it's probably a good issue to have as we come through this bounce back. One thing I want to highlight though is just how positive the brokers' outlooks changed off the back of this report. Now, of course, at the current trading price, I have 6 brokers here that all have upsides of 32, 10, 48, 40, and 37% upside respectively. And they were all made on the 26th of the 8th, today, following the report yesterday. So there's been a massive change in sentiment towards shares like Qantas. And of course, there's been a really big restoration of their financial strength as well. Even though they're still making a loss, yes, it's a lot better of a loss than it was last year.
One of the things that I found out was quite interesting, I saw a report saying, I think Alan Joyce was saying this, that their baggage mishandling is 11 out of every 1,000. So 11 bags out of every 1,000 bags they lose or they misplace or they redirect them in the wrong place. Did anyone else see that?
Yep.
Yeah, their target is to get it down to 5.
So
Yeah,
if I
pre-COVID was
go
6.
on a plane, there's a pretty strong. Wow, that's just insane.
Well, I don't know if you've looked out the window when they're loading your
Yeah.
it doesn't look too good. You've got some valuable things in your bag and they're just hoofing
throwing
them over.
everything.
Yeah, that doesn't really surprise me.
Well, there you go then. Thinking of stuff that is surprising, Lynas Rare Earths is also reported. Now, it used to be known as Lynas Corporation. I believe it's changed to Lynas Rare Earths. LYC is the ticker code. And it's had a report yesterday?
Yesterday. No, Lynas Rare Earths was yesterday, correct.
Very good. And tell us all about that.
Yeah, so they had record profit. Again, a lot of these materials companies reporting very, very positively. Although there's been a lot of volatility in the last sort of 4 to 6 weeks, over the last year, all these underlying commodities for these businesses still very, very elevated. So their revenue was up 88% to 920 million Australian dollars, with net profit after tax increasing 244% to 540.8 million. So not only are they generating more money, they're also able to cut costs as well, and obviously increase that net profit a lot. So I think the big thing here, as I said, was the underlying commodities. So they've got a very mixed bag of commodities that they have, all very rare earths that are used for a whole range of applications. So the way they sort of monitor it is they just group them all together and get an average price. And the average price per kilogram was $60.3 for the financial year 2022 compared to $29.8 last financial year. So not quite tripling, but I guess, about 2.5 times what it was last year. And then shares actually rose about 2% today. So they've had a bit of they've struggled a little bit over the last month or so, but up slightly today, hitting a bit of resistance. But again, quite positive report for Lynas.
Very, very good to hear. And let's finally go over to, I think, Dr. Adam. You're going to talk to us about KGN.
Correct,
right?
yes. So KGN had a bit of a mixed year, and that was also reflected in the financials. So let me just bring the chart up straight away. So we see here, comparing to the previous year, gross sales was actually flat, but revenue was down, gross profit was down as well, and other adjusted readings were down as well. So broadly, not the best reading, I would say, year on year, but we have been, it has been flagged before, and we had the concerns, for example, in regards to inventories. They had issues with that, and also logistics and transportations, bringing products across. They had quite a few issues, and not like the only company. A lot of companies has had issues. So it wasn't surprising, but maybe. Does it really justify that the stock went down like by 68% year on year? That's an interesting thing to talk about because I'm not convinced. And one positive thing I would say that actually brings me to the next chart is that people there are actually interested in KGN. So for example, this chart is showing KGN first subscriptions. So that is a monthly subscription. You can become a member of that. You have free shipping that way for a lot of their products, if not most. And if you look at the increase of the interest of that, that's actually more than doubled in a year. So there are certainly a lot of good positive signs, but broadly, this year wasn't the best.
Very good. And I think, reporting season is so interesting at the moment because, like I've said to clients a couple of times before in the past, sometimes when a stock reports, it reports well and it goes down. Sometimes it reports badly and it goes down. Sometimes it reports well and it still goes down. It's just entirely at the whim of what was happening. A perfect example is Australian Ethical Investments today. That reported a slight drop in what is a negative report. It only went down about 3 or 4%. Magellan Financial, I think, reported earlier this week, and it was a bad report as well, and it went up like 9%. So
yeah, you got to remember there's weeks and months of quarterly results, business updates, company announcements that all have a sway on the share price before the actual final report comes out. So most of it is priced in unless there's a huge surprise. I'm pretty sure AIF had an update not too long ago.
Yes, of course.
So
they seem to update their FUM every month.
And Magellan Financial as well is one that updates
every month.
They
do release every month, don't
yeah.
they?
But I think as well, a lot of it is obviously the guidance. A lot of these businesses, some don't, but some provide a very broad guidance of where they're looking to go into the year, where they're looking to expand, grow, maybe acquire new business. And I guess if we see a business provide very positive guidance on top of a good report, obviously will often drive a very positive result on the day.
Yeah, one thing that surprised me about a lot of the reports is the lack of guidance that has been given sometimes. I mean, for the last 2 years, you've, gone, okay, fair
That's
enough.
expected,
They
yeah.
withdraw guidance, very volatile conditions. We don't know what to do. COVID this, COVID that, supply chain this. And still a lot of people are mentioning the same issues that they're, expecting risks associated ahead and another one still being inflation. Even though, the market is pricing in us coming out the other end, a lot of the business are refusing and not giving really strong guidance because of the same risks that we've been talking about over the last 12 months. So maybe that's something to keep in mind as well.